so much to watch out for in this week now. You have the U.S. inflation data that is awaited, so full focus is going to be on that. And then apart from that, 12th and 15th August are important dates because on 12th of August, we will know on whether or not the U.S.-China tariff truce is getting any extension. And then 15th of August, you have the U.S. and the Russia presidents meeting, and we'll know if there is going to be a ceasefire or sanctions. And within all of this, we are looking at a lot of focus in for gold as well. Joining us now to take through all of that discussion is Quentin May. He's president and CEO at West Point Gold. Quentin, hi, thank you so much for joining in, and never a dull day and never a dull week as well. From where we stand in sense of gold, how are you looking at the prices? It seems to be really getting consolidated now between 3,300 to 3,450 perhaps. What is your sense also on prices going forward?
I think you said the right word there. It's getting wonderful consolidation is happening right now. 12, 18 months ago, we were just hoping, those of us in the gold business were hoping gold would really sustain itself above 2,000. A lot of the U.S. Policy has really added a lot of torque to the gold price. And quite honestly, I think the gold price, now that it's really broken out and sustaining itself above 3,000, looks like we might actually continue to go higher now. And a lot of the policy that we're seeing is actually creating that foundation for gold to continue to appreciate.
Quentin, if you had to put a price to that, what would you say? I mean, are we going to 3,600, 3,800, 4,000 as the levels were spoken earlier as well? How would you look at the range for the rest of this calendar year?
I think the rest of the calendar year, we're going to see it continuing to push its way closer to 4,000 and above. I think we're going to need a real kind of a strong kind of event, because what I always see is the foundation for the gold price and the gold price movement is the U.S. dollar. The U.S. dollar, the inflation, the deficit, the debt, the tariffs, everything all leads to what the U.S. dollar is really going to do. And with the U.S. dollar continuing again to depreciate, it's gone down over 10% this year against its peers. You should see gold as a place where the treasuries, we know that the U.S. central banks are buying gold, almost double what they've been buying historically every month. And that essentially is this quote unquote de-dollarization that's going on. And with the continued policies that are happening coming out of the Trump administration, it's great for gold. And so, yes, I see it continuing to work its way closer to, and more chart-wise, working its way closer to 4,000, stabilizing, and then probably continuing to push through that into next year.
Well, yeah, central banks are buying, but what about the retail and the investors? We see ETF buying as well, keeping itself on the higher side there. But at these levels, would you say the retail jewelry buyers, especially in the Asian markets, perhaps could look sideways, even take a step behind?
What I'm understanding right now is that the demand in India is fairly consistent. It's within 1%. Where the demand is actually dropping off is Chinese retail, which actually is a bit of a surprise in the sense that the Chinese obviously is such a strong gold market. However, yeah, that shortfall that's been happening with, at least with the retail on the Chinese front, is being made up on the central bank purchases. So at least that's the best that I can understand right now.
Quentin, also, how are you looking at various data and events impacting gold prices from here? I mean, inflation numbers from U.S., that expectation that the interest rates that you spoke about, perhaps or not, is going to see a cut from Fed in the month of September. Is it going to get pushed to October, December? How much of rate cuts in this year are you anticipating, and whether or not has gold prices baked that in?
Well, I think it's well publicized, the kind of influence the administration is trying to have on the Fed, and the Fed is being resistant to actually doing or being perceived as not being independent. And as we know, the next Fed governor is not until the middle of next year. So I would say, perhaps we'll see that 0.25 that's being pushed by the administration. That might be somewhat of a catalyst, but a lot of times the gold price actually starts to reflect what the market thinks is going to happen anyway. So the point being is that I see gold as continuing to not do anything too dramatic until we have these events like what happened last Friday with the tariff, the 39% tariff that happened on the imports from Switzerland, which had a huge impact on the difference between the spot price and the futures, the COMEX, normally that trades at about 30 to 50% difference, $30 to $50 difference. It actually went up over 100 at one point on Friday, which now today you'll notice that the futures are actually down $80 right now as we speak, and the spot's only down 40. So you're getting that that difference between the two of them is starting to get back to the normal levels, waiting for the clarification from the White House as to what they actually meant by those. So with the drive, again, when you get these events, it's like it's not a geopolitical; it was just a political event last week with that tax being put on, and now that we're we're going into when the Fed should be doing the rate cut. I suspect gold is going to stabilize and start to just go a little bit higher. I don't think anything really too dramatic happening from the Fed. I think it's going to be seeing what happens with the inflation and the U.S. dollar numbers that are going to be way more impactful on the gold price, and have that could be the impetus for a real move higher.
Quentin, talk to us about geographies as well. I mean, central banks buying is one thing. De-dollarization as a concept really seems to be on for some time now. But when it comes to geographies, is Middle East buying a lot of gold? This is from investors' point of view. Do you think there was a time that U.S. coins were on a lot of sale? It's not happening right now. Europe, for that matter, Asia is another part of this. Where do you see a lot of investment in gold at these current levels?
Well, at least for my business, it's flowing. Fortunately, we're starting to see a lot of move back into the ETFs, which is what we've been hoping for. The industry really is, people go for those basket of stocks like an ETF does, which essentially would be, depending on the ETF, either holding or related to the physical price of gold, or the price of what the major producers are doing. And a lot of the major producers are now finally, their share prices collectively are getting back up to where they were in 2011. And remember, gold is 3 times higher the price now and currently than it was in 2011. But the basket, like in New York, you have the GDX, which is the basket of producers, of majors. And so those are actually still coming up on the levels from 15 years ago, just to show you how skewed the market is for equity investments versus the physical investments. And so I think you're going to really see the investors starting to go back into the equities, because that's where the upside potential is. The gold price is going to take it's going to work its way up through 4,000. It's going to work its way up higher from that, which is more incremental. But the actual equities, you might see doubles, triples, and more, which, as we know, people do tend to go where they think they can get the best returns. So with that being said, I think you're going to start to see, once people are making money, more money will come in and gravitate to the sector. And that's really the impetus we need, is that when people are making money, they're not going to be thinking of other investments. They're going to be thinking, okay, I haven't missed the gold boat. There's a lot of upside potential to it, because the gold boat, for investing, there's a ton of upside potential to it. With equities, that could be doubling and tripling. And that my sector is the development side of the gold business. And that's where we see a lot of kind of torque on the gold price, where you have the most upside potential for people that would want to invest in the sector.
Quentin, so yes, gold should be a part of your portfolio in sense of a diversification there, but just how much, with the kind of statements that you just made on equities vis-a-vis gold, how much gold should one hold in a portfolio? That being one. And the other thing, the way the gold prices have run up, we've had HNIs and institutions and mutual funds and funds all start to talk about it and even start to advocate having and holding gold in your portfolio. Is gold mainstream yet?
Quite honestly, I think we're just at the beginning of just looking at the chart from 18 months ago, you could say, okay, it's up 40, 50%. I may have missed the boat. Quite honestly, I think the boat is just leaving right now. And it's actually the movement in the price of gold right now has just reinforced the importance of holding gold in your portfolio, at least 5%, perhaps more. And taking a look at saying, okay, if I hold physical, I've got to store it, I've got to protect it, for lack of a better expression. If I buy an ETF that's based on gold, at least I've got that. Or if I buy an equity of a gold producing company, then I'm looking at, okay, now I can see what they're doing to be profitable and what they're going to do for their investors, whether they're paying dividends or doing share buybacks or what have you. So it's actually basically just looking at what area of gold you want to hold. And there's lots of ways to get exposure depending on what level of risk, I guess, that you'd like to hold.
Quentin, I'll wind now this conversation with just one more question. And within the precious metals as a space as well, we've seen gold perform, but we've seen silver kind of outperform in the recent few months. We've seen platinum do even better. And then you had palladium as well, which also ran up quite strongly. There are deficit stories and there is strong industrial demand as an expectation as well. That narrative seems to be playing quite well too. How are you looking at the overall precious metal as a space?
Well, I think the primary investment for precious metals is gold. People call silver, the poor man's gold, for lack of a better expression. And I know, silver is really driven a lot by the U.S. demand and interest in silver, and that a lot of the people that are following silver see silver, which has kind of been range bound for the last couple of years, hasn't really had the breakout gold has had. So the natural assumption is silver should be going up at least a double, $80, $100. And I think there's certainly the foundation for that happening with the general market sentiment. The other metals, platinum and whatnot, I think those, at least for my purposes, tend to be more industrial driven than, and so I think a lot of that's going to really still be driven by how demand for industrial uses for the metals are going to be. But silver is more, as mentioned, is more of a, in my opinion, at least a precious metal, whereas the other metals are more like platinum are as I said, more industrial in usage and demand.
Well, that point is well taken, Quentin. Thank you so much for joining in today and making sense of all of those things, which is precious metal, and of course on what really could impact the prices. This was a very, very interesting conversation. Appreciate your time with us today. And with that, that's all the time that we have on Big C. Thank you so much for watching.